Good morning, guys. Welcome to another Crypto EMC Trade for a Living podcast. And what we have here is Bitcoin. And the argument is that Bitcoin's been flat for the entire year. So if we look at the yearly candle, which is about to close right now, from last year or 2024, the whole of 2025 ends up being a very bust of a year. But the beauty about this is the following rule, and it's the 50% retrace. And it stems from us negotiating. So it means that the market is not necessarily bad for Bitcoin. It means that the market's trying to find out where good value is. And the way we do this is when we barter with each other or negotiate with each other. So if I say buy something from me from 100 and you offer me 50, we both psychologically know that somewhere in the middle is where we want to meet, 75. So if I say 100, I will probably accept a 75 offer, and you would probably want to try and combat me, or try and get it lower than that because I'm going to negotiate you back. So that's a typical negotiation, and typically that's what happens in the market. You'll find that big candles, when you have this massive move, the market then thereafter needs to question whether this is truly going to be the next price for Bitcoin. And the way that it does it is it goes and retraces to that 50%. Meet me halfway. So this was cheap, this was expensive, meet me halfway. And the price action, or the way that you show this on the chart or chart this, is by just using the 50% of the candle that made the next high move. So you can see from this year, there was the high, and I'll make it a little bit bigger. There was the high. We've gone with the candle that makes the higher high, 50% retrace on that candle. That's the buy. And there we had this move. So now we've had we've just had a new higher high previous year. So now we're trying to get price back down to 67, which means where we're at right now, we could potentially bounce, or we could still see price go back down a little bit lower, because this is trading, guys. There's no exact science. We're not 100% correct. This area is a buy zone, just as that area is a buy zone. And this could have been the retrace already. So we'll see. If we take this then to the daily time frame, this is now the 12-month time frame. If we take this to the monthly time frame, the following is also true as well. You can see more confluence around this. So if we have a look at this previous bear market, there was a high there. I marked it out for you guys. The candle that made the higher high, 50%, that's the buy. There was a high, although there was higher highs there, but I mean, we're looking at the first next higher high. The candle that made the higher high, 50% of that, there's the buy. And this is yet again another higher high we had there. The candle that made the higher high, 50% retrace, that's the buy for the continuation. And herein lies the big question where we're at. You can see that it is a blend of candles. And although the candle that made the higher high is this candle, we've already fallen through that. And that means that from the lower time frame, we're in a big buying the dip question. And to try and answer this, we're going to have to look at Bitcoin on the weekly and as well as Bitcoin on the daily time frame. Okay, so to round up the first statement of what we said, Bitcoin the yearly, what does it really mean? Because we had a flat 2026, it's an amazing year for us, because we could either have one of the following. We can have the market going to test these lows, which means from a trader point of view, I don't care whether it's up or down, there's a lot of gains to be had. 30% on a price action. For some alts, it could be bloodier or even more. There's a lot of moves still coming, and it's that volatility one trade. The other side is, if we already tested the move, the next target or the next attempt that price will do is to try and go make a higher high, which means that's a double in Bitcoin price from 70 to 140. So either way, because the year is flat, we are looking at the next move to try and go and have a look at the extremes of that candle to define whether it wants to move. So if we fall below the extremes of this year, 2025, more downside, we could see a complete reversal. Things can get extremely bearish. I don't care. I'm going to make money on the way down. Go above that extreme, things will get extremely bullish again as well. And this is a nice area then for that to kind of, for the market to kind of put it in that perspective for us. Now, let's take this price action for Bitcoin to the weekly time frame. So we've looked at the bigger picture. You've looked at the confluence of the 50% overlap. We're in an area where now we want to look at the continuation of trend. So what I have here is Bitcoin on the weekly time frame. And although we've been in this buy zone for the whole of December, we still have hidden bullish divergence on the weekly. And what it means is price has retraced significantly, so much so that there's an imbalance between price and the RSI. They have not moved in harmony. We've overcorrected. Therefore, a bounce is plausible. The market tends to always overcorrect. Everything gets overcorrected always. So the hidden bullish divergence is a really nice area for continuation of moves. So whether you're bullish, sorry, let me just bring the chart back. Whether you're bullish and you feel like the next target is 150, or whether you're bearish, in both these scenarios, upside is potentially first going to happen. So it's better to be bull regardless whether you're bullish or bearish long term. That's basically what hidden bullish divergence is showing us. With a clear invalidation for below 75, then things really gets bad. Okay. Now, I want to unpack this a little bit because we want to look at the trend, and I want to look at the trend from a bullish point of view, and then I want to look at the trend from a bearish point of view, and to just kind of set the tone to prepare that we're right in any way, because Bitcoin has reclaimed, when we're going to zoom in now, significant support levels. And those support levels are going to point to a bullish trend. So understand what it is you want to see if it's going to be bullish so that we can then trade that. And then also what it is I want to see for it to be bearish, because I want to short, I want to ensure that my bullish optimism, my New Year's optimism for 2026 being a positive year, I want to make sure that that doesn't get kicked in the teeth because I'm just thinking on one narrative. Okay. Over to the comments real quick. Let's just quickly say hi. There's about 63 people joining in live. Thanks so much for each and every one of you guys. Hello, Jerry. Hello, Stanku. Thanks for joining. Nice to have you guys here. Hope you had an awesome festive season. Let me know in the comments. Now, let's have a look at this thing. So if we look at this from a bullish point of view, let's start with the bullish side. What we want to see is we want to see the momentum last. Now, the tool that I use, the simplest tool, the easiest one, is the FIP speed resistance fan. Take it from the bottom and start holding on to the tops. As long as we stay above the trend or within the trend on retraces, the expectation is that there should be more. And where we're at right now, you can see that we're on that point where if it wants to lose, I mean, we're flirting with this area. If it wants to lose, this could be the beginning of something really bad. But we need to be optimistic. Buying the dip means you're buying it when it does look bad, just like in all the other instances. So the momentum from this, from a weekly point of view, I would still wait in favor of the current trend being that of a bull. If you were to be bearish, the only way that you can look at this thing is to analyze the market from this point of view, saying that I'm excluding all of this information, and I'm just going to look at this saying that this is an overwhelmingly bearish trend. Okay. That's the difference. So to conclude the bullish analysis, for me to now keep on driving myself in trading in harmony with the trend, I want to be bullish, but I want to make sure that what happens within this buy zone on the smaller time frames also gets supported by being bullish or having bullish momentum. Okay. The bearish side, as I say, now we have to look at this from a smaller point of view. You can't really use the weekly time frame for that because there's not a lot of information in there. All that we can say, if you want to be a bear, is that areas like 105, which was critical areas of support that needed to hold, just like the 119K level, those areas will probably get retested. So if we're a bear, this is the area where I would want to look for hidden bearish divergence for the continuation. I can't short here. So the bear in me at this stage means that my hands are either holding on to the trades I'm in, or I'm out. I can't sit in a short right now. Okay, that's it. If we then take this thing and we have a look at the daily time frame, I just want to switch off this, and we have a look at the daily time frame. the overwhelmingly obvious trade direction then still sits to us being bullish, not bearish for Bitcoin, because the bearish zones are much higher, 105. Only then we need to be thinking bearish thoughts. This means that looking at this price action, where would hidden bearish divergence occur? There, 100 101, 105. So we're far away from that. So to look at this lateral range, I would rather say that we're trending within range. Now, a trend line by itself doesn't bring any value to an analysis. It tells you what you should have done, never helps you what you should do. But it's nice to have a look at this and say that this is what retail will be seeing. And their expectation to flip bullish would be this. Go make a higher high. That's when we want to be bearish from the daily perspective. Okay. Now, while we've been in a down, while the market's been quiet, I've been working and I've updated the new Buddy. So the Buddy Pro. And the Buddy Pro looks at Bitcoin through 3 different lenses. And what it does is it gives you a note at the top that explains what we are within the market, what sentiment you need to do or have, and so forth. So it doesn't just override the candles anymore. It doesn't just give you your trade setups being bearish. This is a bearish market. There's all the bearish trade setups. It doesn't just do that. It also gives you a momentum analysis to help you through it. So at the moment, Buddy says that we've got weak bearish continuation. Weak because we are from a bearish trend into a lateral range. The market is weak. Price is below support levels. So if we want to be bearish, we wanted to stay there. So above or below resistance levels, above support levels, depends on how you want to word it. And it says, if you want to be shorting now, which would be the daily, the trading in harmony with the daily trend, it needs to be cautious shorts and very low risk. Okay, that's it. And if we have a look at the short setups that we had, we moved into a short sell zone there, didn't quite get to the buy zone. There was a sell zone, got to TP1, that so forth. So that's what the indicator does in this analysis. Now let's take this and have this analysis then play out on a smaller time frame. Let me show you guys this. And while we're doing this, just a kind reminder that this video is brought to you guys by PrimeXBT, where I trade. This was my last trade. We shorted Bitcoin at 100K. And from that point onwards, I took my profit. I took my profit way too early. And the previous attempt obviously failed. I mean, there you have it. That was the previous try to try and get in a nice long. So there was a little bit of a loss. There was a little bit of gain. That's the way trading works. So I am looking at my next big trade. And that's what this analysis is trying to move. So the weekly, to put it back, to remind you guys, the weekly is giving me really big next big thing signals because we've had a flat here. All that chop is going to get filled, both sides, either side of the wick, or upper or lower wick, doesn't matter. One of them is going to get filled. Okay. Then the daily time frame, we're range bound, but we moved in with bearish momentum. But it's fine because we've got hidden bullish divergence on the weekly. We want to try and look for that. And there is a trend within range establishing itself. Stay above that trend. The odds that we're going to move up is good, which means that we don't want to be bears right now. The time for bears are going to be much higher. Now, the 4-hour time frame is where I'm looking at the critical supports. So we've had a range bound. And the reason I'm looking at the 4-hour in a different light than I would normally do is this sell-off was so fast. We didn't have any divergence. This is like a blow-off top, the reversal, or inverted version of a blow-off top. It gets so crazy. There's no waiting for divergence. It had to reverse. It was the automatic reaction that played out. And although there wasn't any divergences, now that the market has kind of found a little bit of common sense, it's establishing itself, it's creating a range, and it is building an accumulation or distribution. And the entry on the manipulation of that move, or the shakeout of that move, is what we're looking for our next trade long. Okay, so this means that if I switch on the Buddy Pro, We want to see that it is telling us the trend is turning to the bull side, which is already done. It's turning bullish. So it means that we cannot trade bearish setups on the 4-hour anymore. We need to trade bullish setups. And the momentum analysis is that we're in a bullish trend. It's a reliable, ongoing uptrend, calm and trustworthy. You can risk about 3%, hold your longs as swing positions, and then use the buddy bull setups for entries. What we have right now is we had the strong bullish divergence buy setup that was between those two lines, and price is on its way to TP1. And then we have the breakout, SO3, your breakout trade, which entry is there with TP as well. So we want to see for the rest of the day price moving, or the rest of the week maybe, price moving into the 92 area levels for the take profit. The support area that we cannot lose sits right there at around 87. And from a divergence, the pivotal support area is at 87 dead. There's the line drawn by the buddy indicator. So any of this move still down can still be seen as a buy the dip. The market could be building another base. It could chop around and only later on have the real breakout that continues. We don't know. We'll have to be open to it. But for now, the support areas that you want to look at is this. The support areas that the buy zone you want to look at is there. And everything is clearly shown by the buddy indicator. And you can get access to that with the promotion with Prime XBT for the next 2 weeks. And all that you need to do is head over to Discord, click on the partner promotion. There's one promotion. Follow the on-screen prompts there. And then when you're done, open the ticket and claim your access. I'll give you access to this for 2 weeks, guys. That's it. That's all. And that is basically everything for me for Bitcoin at the moment. Now, let's zoom into the smaller time frames and have a look at how the indicator functions, just to give you guys a better idea of how simplified it is and easy for you guys to use. I'm going to go to the rewind candle play. And the rule, as I always say, you trade the higher time frame color direction, which means from where we're at right now, you can see the cursors on both screens. We're blue, so you're trading bullish. So you switch your buddy, you go to buddy, and you say you want to trade the buddy bull setups. And then you wait. So it will give you bull setup buys, SO1s, SO2s from the bullish point of view. And then you wait for the momentum to support that. So if I hit the play button and it starts running, each candle comes with a different analysis. I'm just going to place it. Weak bearish momentum. Let's hit the play. Now the buddy is overriding blue. It says the momentum is starting to become bullish. There it goes into the buy zone of the SO3. Bullish trend still intact. You hold your longs. Bullish trend still intact. So it keeps you in the trade for as long as it's there. So as long as the candles are blue, you hold on to your trades. You hold on to your longs. And as it's printing, as it's going up, it keeps on keeping you in the trend. And it keeps on telling you whether it's a reliable ongoing uptrend or whether it's a bad uptrend. There it's giving you the SO2. There's the entry TP1, TP2. There's an SO4. So should the market retrace again, that would be the support area where it would have been and where you would have had the buy. So there's the confluence. The market just ran away from us. And as it's running, it keeps on telling you what the momentum is like. It keeps on telling you what the trend is like. And it tells you what your risk management and your trade direction should be. So it keeps you in the move. So it's an easy tool to help you steer the course. Okay. As we're moving up, momentum will start slowing now because we're getting support levels printed. And if we fall below those levels, that's when the retrace will occur. So the buddy will again say, well, where do we buy? We want to buy good support levels. So it's throwing out those buy zones in that range. There's an SO2, there's an SO4. And as price starts falling below this, which it did in this case, the indicator cannot predict what the future will do. It can only tell you what your trade direction should be with what we want to see play out. Now it's saying momentum is weak bullish. be careful and so forth. And it is advising you, or I'll not say advising, it's not advice, but it's telling you what the TA is basically pointing to. So range-bound environment, stay away, and that's where we're at right now. So on the 5-minute right now, buddy's saying to you guys, we're in a range-bound environment. We have lost trend support, which we should have stayed above. Late orders, those going long or late will now get taken out. Secure your swing trade profits at these range highs, because we'll probably build a base before we start continue onwards. There you have it. Okay. And at that stage, it will flip blue again. It will give you the momentum analysis, just like it did back there, as well as the bull setups. With this being said, where it's at right now, you could choose to switch the buddy to bear setups and start trading the bearish trend. But now remember, guys, you're fighting the trend. You're trading against the harmony of the trend, because the macro, the higher time frame, is still saying that it's going to go to the upside. This is how simple the tool is. It's easy to use, and it is yours to trial compliments of Prime XPT. There you have it. That's everything for me for today, guys. Thanks so much for taking time. I've broken down Bitcoin. I want to leave you guys with this, just the basic idea. I mean, where we're at right now, but silver is ripping all-time highs. Gold's at all-time highs. S&P's at all-time highs. Nasdaq's at all-time highs. This could stay like this forever. We don't know when it's going to end. We want it to end it because we're probably not in on any of those moves. That's typically human psychology. It's not. I'm not benefiting, so I want it to end for somebody else so that I can start. But as long as this stays, Bitcoin should catch up. We also know that statistically, when the Fed pivots, which it's already done, it relaxed the interest rates. When the S&P is at all-time highs, statistics show that there's a 12-month probability of continued upside. We're only 2-3 months in. We could still see 10 more months. Bitcoin could revisit all-time highs. Altcoins could see a little bit of an alt season. There's a lot that could happen, and new years do have a way to breathe in new life into a dying market. I've seen it so many times. January can do amazing things to a trend. So to leave you guys with some positive thoughts for the year, I'm looking at the market through a bullish lens. I've capitalized as much as as much as I skillfully could from the being a bear at the right time. I want to utilize that and move that into some really good longs. And I think I've built a nice tool for you guys that will help you as well navigate that. Have a lovely day. I'll see you guys again a little bit later during the week. The market is moving. I want to start getting in on the moves. Cheers, everybody.